Felix here, and the Fed is just giving us an update which I think is quite critical, and I think it's quite important we understand what that's all about. Fed President Daly, that's the San Francisco Fed, gave a presentation today, or speech today, in which she confirmed that there would essentially be at least 3 rate rises. At least that's my interpretation of it. Why do I say 3? Because she said the economy can handle several more 0.5% rate rises. So that's an additional 1.5% basically on top of where we are right now. And she's essentially saying, look, the economy can handle it. And if you look at what's happening in the market today, absolutely brutal, vicious volatility, I would sort of beg to differ. But what we have to understand is that this is the intention. This is what the Fed wants. The Fed wants to tank the market. And she said, look, we need to get demand and supply back into alignment. Now, Fed Chair Jay Powell said very, very clearly that they cannot control supply, that they have no power over supply whatsoever. And therefore, the only thing that they can do is kill demand. Now, how do you kill demand? Well, one way of doing that is tanking the market. Look at a chart of PCE, look that up. Go to tradingview.com and type in PCE. That's the consumer expenditure. Compare that to a chart of, say, the S&P 500. Go back a few years. And what will you see? When the markets tank, consumption tanks. That's demand. So they know they can't control Russia. They know they can't immediately remove all the money that they printed. They know they can't control the shipping disasters, the logistics stuff, the China-US trade spat, all the stuff that's really contributing to inflation. They have no power over it, so nothing they can do about that. What they can do is tank consumer confidence and thereby our expenditure on stuff we don't really need. Like, we don't really need a new Tesla, right? We don't really need a new fridge. We don't have to go out for dinner. Those are the kind of things that then decline, and that means companies make less money. So the earnings go down, therefore company valuations go down, and therefore we lose more confidence, we feel less wealthy, we spend less money, companies make less money, earnings go down, companies' valuations go down, we lose confidence. Can you see where I'm going with this? It's a circuit. It's a circle, it's a vicious one, and there's no one to bail us out. This is intentional. The Fed has basically realized they should have given us a recession over the last 10, 15 years. They haven't given us one. They've always bailed us out. And by doing that, they create this kind of bubble economy with zombie companies that really shouldn't be around, shouldn't be alive, should have been shut down or taken over by the better companies. All the decent companies have so much cash, they don't really know what to do with it. And that's just where we are. Now, is it all doom and gloom? No, absolutely not. It also is a huge opportunity. Where are fortunes made? In bear markets, not in bull markets. In bear markets is when we can accumulate great companies at lower prices. We can keep doing that gradually, not all at once, because we never know where the bottom of the market is. But when you look at all the charts, when you look at all the indicators at the moment, it doesn't seem to me that the bottom is in quite yet. Does that mean I stop buying stocks? No, it doesn't. It's just I'm very cautious on what I'm buying. I really look for the quality indicators. If you want to know what those are, send me a message, felix@goatacademy.org. I'll definitely reply you. I reply everybody within 24 hours. And don't freak out. Don't panic. You can make money in these markets. It's just very, very hard to do with stocks, essentially. So the Fed is intentionally tanking this stock market, just like they intentionally caused the rally. They've discovered they can do it the other way as well, and they seem to be willing to stick it out. So fasten your seatbelts, increase your investment horizon. It's got to be 5 years plus, otherwise you shouldn't be in stocks. Really should be 10 years ideally. So that's my little quick update here from the gardens. There was actually a sprinkler making my feet wet, so I'm going to stop it here. And I wish you a beautiful day. Thanks very much. See you on the next one.